One thing about the cell phone, the clock on there is accurate, right?
Indeed.
T minus 1 minute and 20 seconds. Oh, even though people will be able to see me up there, I'll mute my microphone, Richard.
Okay, oh, so so Stephanie will be turning pages for me, right, Steph?
Yep, I got it. Just let me know when you want me to advance the slides.
Thank you very much.
Thirty seconds.
Hmm.
10. Well, the hour being 2:30, I want to welcome everyone to this National Aeronautic Association webinar / luncheon series with Richard Aboulafia. My name is Greg Principato. I'm President and CEO of the National Aeronautic Association. And as I said, welcome to all of you. You know, we have a luncheon series each year, and we always kick it off with Richard giving his State of the Union or State of the Aerospace Union remarks. And I wish we had somewhere we have a recording of last year, which was given before COVID. And maybe we should do, Richard, at some point when you're done with this, is put the two together and sort of see what it looks like one compared to the other. But just want to welcome everybody. Before we get started, I want to thank our sponsors. You know, we can't do this without the sponsorship of some wonderful partners. Safran USA and Flight Safety International are sponsors of this particular webinar. And I also want to thank the companies, and I'll name them in a second, who were sponsors of last year's luncheon series, season table holders, who we only had one lunch last year. So we want to thank you all as well. Aerojet Rocketdyne, GE Aviation, Gulfstream, Lockheed Martin, the National Air Traffic Controllers Association, Northrop Grumman, Rolls-Royce North America, and Raytheon Technology. So thank you to all of you for your support of NAA and for your support of these series that we do. You know, I think Richard is one of those people who really doesn't need an introduction to this audience, I think, but I think we'll give him one anyway. He's Vice President for Analysis at the Teal Group, contributing columnist to Aviation Week. He is a newly minted fellow of the Royal Aeronautic Society. So when he takes his drink during this, he'll have his pinky up in the air while he's speaking. Richard, as you all know, is quoted in many publications because of the sort of penetrating accuracy and of his analysis and the interesting way in which he presents it. Whether you agree or disagree, like the conclusions or not, he really is someone to whom attention must be paid. While Richard is speaking, for about 20 minutes or so, you'll see at the bottom of your screen, if you move the cursor around, the Q&A feature down there. Please use that to send questions in. I'll be monitoring that. And when Richard's done, we'll go ahead and pass those questions along to him. I know we always have a lot of good questions from the audience when Richard speaks, and we'll try to get to as many as we can. Now, usually at this point, Richard comes up to the podium and I give him a beer. And that's sort of one of our little things that we do. I give him a beer. And since obviously we are not in the same place this year, I can't do that. And frankly, Richard, given the sort of joyless nature of the last year, it would be a non-alcoholic beer probably anyway. So maybe it's better. Maybe you've got one of your own. You know, we already have somebody in the chat room, Clay McConnell, says I have to drink the beer. So I'm not in a place where I can get my hands on one right now, but I will do that later. Richard, I bet you have something better than a non-alcoholic beer, but I'm going to turn it over to you.
I'm with Clay there. And yes, that's right, Greg. This year's beer is named Raised by Wolves. And given the from the local Washington, D.C. Right Proper, there's my pinky, Right Proper Brewing, Raised by Wolves does not at all describe the level of childcare that my wife has been able to muster during the terms of this pandemic. I want you all to know that. But nevertheless, it does ring true somehow. Anyway, I'm deeply honored to be back here in these rather difficult and remote circumstances. So thanks to you all for coming and listening to me, and for the sponsors too, as Craig says, couldn't happen without them. Never seen anything like this. You know, after 34 years, you'd think you'd seen everything, tracking aircraft programs and markets, and then this happens. Pretty strange. So I'm here over the next 20 minutes or so to walk you through where the numbers are trending. And in some ways, I'm kind of an optimist. In some ways, maybe not so much. So next page, please, Stephanie. There we are. When this whole thing started back March something, my colleagues and I sat down and said, well, this is going to be unpleasant. What's the damage going to be by segment in our coverage universe? What we came up with was in black there. The red annotations at the bottom are how we kind of feel now. So basically, we thought that the first thing and the thing that would get hit most would be twin aisle jets. That's because international traffic is going to get hit hardest, fastest, and longest. You already had, on top of that, an overcapacity situation with twin aisle jets and airline fleets. And then on top of that, you already had a secular shift underway from twin aisles and towards single aisles in airline fleet planning. So there's the annotation. Yeah, it's just that bad. The epicenter of pain in this business, twin aisle jets. Single aisle jets, we thought would be second most hit. Fuel prices, big problem. China, uncertain. And on the positive side, we thought there'd be some relief due to the fact that we were actually a little bit supply constrained due to the MAX problems, due to A320neo production difficulties, and whatever else leading up to that. Feel the same way. Business jets, we didn't quite know. We thought they might get hit, particularly at the top end. It doesn't seem to be that bad. It looks like we've got a year or two downturn, but nothing like what we feared. And as a matter of fact, it's kind of a funny commentary. The entire world of building aircraft, only one company, civil aircraft company, was profitable last year, and that was Gulfstream. So clearly there's a bit of resilience there. Civil rotorcraft we thought would get hit. It got hit in oil and gas, as you might think it would, given the hit oil and gas prices. Not that bad. And then most of all, we thought we would see a safe haven in military programs. And you know, that's proven to be exactly right. Aside from the production disruptions associated with military projects, that part of the market is holding up just brilliantly, maybe even better than expected. So this is sort of the spectrum. I guess I should have color coded it with red at the top all the way to green at the bottom. But next page, please. Here's our matrix of global aircraft industry output. And this is just at the new build level. Doesn't include an awful lot. You know, you look at the ecosystem of building aircraft, it's really a $500 billion a year type of operation. But just at the new build, last year fell to 117 billion, as you can see in the lower left, 35% drop relative to 2019. One of the least pleasant drops that I've seen ever. As a matter of fact, you look at the two big drivers at the top, single aisle jets and twin aisle jets, both fell by about half. That was very painful. Everything else fell by varying degrees. You know, some of it isn't market related. Like, for example, fighters fell by 23%. Part of that was just, all of that was just production difficulties. Lockheed Martin was going to deliver 143 F-35s last year. They could only manage 123 last year because of the pandemic. Everything else, though, is in red for unfortunate market reasons. Next page, please. And of course, the center of our problem is traffic. Oh boy, never seen anything quite like this. You know, I included the 2008 downturn on the left side of this chart and where we are today. And typically, you know, in any given bad year in the history of aviation, and you know, when the year ends, you'll have lost 2 or 3%. 2008, the year end, we lost, I think, about 3%. After 9/11, it was a 2 or 3% drop. 1991, Gulf War I, 2 or 3% drop. Here we've got a 66% drop, and it reflects an economy, a global economy that basically conforms to what Paul Krugman said. It's in a medically induced coma, and travel reflected that. Available seat kilometers, that's capacity, fell by 57%. Good news, cargo is mostly back. Last year it fell 11%, but by December it had made most of the way to a recovery. That's the FTKs, freight ton kilometers. So that's kind of sort of almost a bright spot, I guess, in the broader context of things. But revenue passenger kilometers, that's what pays the bills. That's what drives jetliner demand. And oh boy, never seen anything like this. Next page, please. Oh yes, it is time for our first poll. A wonderful, I guess we really couldn't do this in real time back at the club, so we can take advantage of the wonders of remote electronics. And when will air travel return to the 2019 revenue passenger kilometer peak? I've got my view, but you know, I know there's a couple hundred of you out there, so I'd love to hear your view. There are your range of choices. Please vote now, 22, 23, 24, 25, or the 12th of never. I'll give you a couple seconds to respond. Interesting. Terrific. Thank you. I was at 2023 myself. Next page, please. I am now in the elite 4% group of late 2022. I have enormous respect for IATA. I think they do an incredible job. And they're still saying early 2024. I had been saying, along with many of my peers, 2023. So I was with that big bulk of folks who said 2023. Why am I at late 2022? And I to understand my thinking, my so-called thinking, you have to go back to when this whole thing started, and it became very clear that this was something completely different. So you're really looking at May or June. And if you'd had a conversation about vaccines with anyone, then you know, you had doctors out there who'd said things like, we don't even know if a vaccine is possible. And today we've got 3 great vaccines with 95% or close to it efficacy, another one on the way, and a couple second-tier ones that are going to do really good work out there, far better than expected. Second, a far better than expected economic outlook. If we had had this conversation back in May or June, and I had said, I predict the Dow will be at 31,000. I mean, I would have laughed at myself. It's ridiculous. And yet here we are. It is. The economy, in part due to lots of cash being dumped into the system by central banks all over the globe, just has a ton of cash sloshing around. Similarly, if you had said that no matter how bad things were in China, you know, January, February, March, they'll be mostly back in domestic markets by the end of the year, I wouldn't have believed you, but they were. Then you've got the big question, what are people doing with all that cash? And there's this wonderful schematic that was in the Times that I've plagiarized here. You can see the link, so it's not plagiarism. But during the months of this pandemic, personal income greatly grew because of all that liquidity dumped into the economy. Spending plummeted. You didn't take vacations. You didn't go out and dine. You didn't consume. You know, you might have bought some recreational equipment to replicate a home gym. I don't know, but you didn't spend. The consequence is a record savings rate to the tune of a 45-year record savings rate. This represents $1 trillion of dry powder waiting to be spent when those vaccines kick in. Given all these macroeconomics and given that vaccine reality and given the China experience, I can't think of a good reason why we will not have a full traffic recovery by late 2022. We can argue about the sustainability of business travel growth rates beyond that. But the snapback by late 2022, I regard as a pretty good baseline scenario. So hang tight there, 4%, fellow 4%ers in that poll. Next page, please. Now, here's the chart I was dreading, the center of our pain. With apologies to Prince, it's time to party like it's 2006, because unfortunately, the sudden fall off in production has knocked us back down to a level of jetliner output that hasn't been seen since 2006. And this was after a shocking and remarkable 14-year growth cycle, the super cycle between 2004 and 2018. I didn't see this coming. I knew there'd be a correction. There always is. Everyone, as they say, forecasters have successfully predicted 6 of the last 3 downturns. I just didn't see a downturn like this. The only thing I can tell you is that if you accept my views on that traffic recovery for all the reasons I laid out, then we're at the bottom and we're soon to climb out of this. But right now, oh boy, that hurt. Next page, please. Now, one thing to watch for moving forward, my favorite set of metrics, when it comes to jetliner demand, the ratio between the cost of capital and the cost of fuel is overwhelmingly important. You want a dream scenario, like back in 2008 and after, where airlines are confronted with expensive fuel, and that makes them, of course, retool with the latest and best jets, and they have access to cheap financing with which to buy those new jets. You want that ratio to be a nice wide spread. And COVID-19 has pressured both downward. The good news is 2021 has started on a very promising note for fuel. We want it to be in that Goldilocks range of 50 to 80 bucks a barrel. More isn't good, less isn't good. And West Texas went above 50 a couple of weeks ago. Brent followed, or the other way around. Hopefully we'll have a year of something in the 50s. That would be great. Meanwhile, thanks to all that liquidity sloshing around out there, basically you've got let's just say the cost of capital is going to be linked to the cost of dirt for a very long time. And as a consequence of that, there's so much cash sloshing around out there, people are looking for investment opportunities. Why are there 250 people fooling around with urban air mobility concepts? It's because somebody out there is willing to give them $10 million each. You're looking for a home for your capital. And why is jetliner demand or output staying higher than that traffic picture should indicate? It's because people want to invest in us. That's really good news. The investors are keeping the faith and sticking with jetliner finance. Next page, please. China, another thing to watch. As you can see, demand from China has played an important role in powering us out of previous downturns. We want that to continue, but China's problems kind of predate the pandemic. They had seen a significant slowdown in air travel growth. They went from 12.2% growth in late 2018 to just 5.3% in late 2019. That's not good. So when we talk about a China market recovery, we wanted to return to China 2018 rather than China 2019. We'll see. And of course, a lot of this revolves around geopolitical concerns and of course, decoupling between China and the West and whatever else. But basically, so much rides on China's role in this recovery. Next page, please. Book to bill, no longer a thing. Most I can tell you is that hopefully we won't have negative net orders this year, but we sure did last year for the first time, I think, in ever. Next page, please. Where are we going? We break down air travel output in 3 different buckets. Regionals at the bottom, twin aisles on the green line, single aisles on the red line. Now, 17 years of history, adjusted for inflation, 10 years forecast. The most important thing to remember is that that secular shift that was already underway between twins and singles is greatly benefiting the single aisle comeback. And we're going to see a return to peak, actually in rates by late 2023. That's a really strong bounce back. Some of that is a little higher of an angle because of the maxes that were built but not delivered. Still, it's notable. Now, twin aisles, that's another story. That's going to take a lot longer. to get back to where it was, probably beyond our forecast period. Next page, please. Backlogs. This year, Boeing started adjusting its backlogs with something called the ASC 606 accounting provisions, which allowed for financially weak carriers. So in the interest of fairness, we measured Boeing with and without ASC 606. Either way, they're taking a hit, and that's a cause for concern. Next page, please. The reason it's a cause for concern is that it's very highly localized. Boeing and Airbus are doing fine against each other in most segments, but look at that 200-seat single-aisle segment. Basically, as airlines look for ways to make themselves more nimble and to, well, connect different city pairs with new, thinner routes, they're looking to the 321neo. The MAX 9 and 10, which you can see also in that single 200-seat single-aisle segment, just doesn't seem to rack up the same numbers as the 321neo. Everyone wants a 321neo, and whether it's ironic or just a bummer, it's the one plane people can't get because of production difficulties in Hamburg and because the XLR version isn't coming online until 2023. The biggest single question in this business, will Boeing do the right thing and develop a new jet, or will it simply accept the loss of an awful lot of market share because of this fleet dynamic? Next page, please. I will allow you, dear listeners, to answer that question. Will Boeing do a clean sheet mid-market jet to compete with the 321neo? Take a moment to answer, please. I will enjoy some raised by wolves. But it has to clarify when, this decade. Let's go with this decade. Yes. Thank you. Okay, next page, please. Our forecasts assumes that they don't, and this is the result. We've broken down the 321neo. I want more than anything, for the good of the industry, for the good of everybody, we're going to do a new clean sheet single aisle jet. I'm not quite there yet. Great to see the audience saying 70-30 in favor. I'm at 51-49 against. If they do, I think it's a fantastic opportunity because the 321neo is in the right place at the right time, but it's not the perfect jet for the mid-market. Boeing could easily get a 2/3 share of that segment as long as they do a clean sheet single aisle jet. They just have to do it. Just have to click your heels and you're there. Otherwise, this becomes a 60-40 story. And if history tells us, and it might be worse, it might be 65-35, we don't know. And if history tells us one thing, it's that it's really tough to recover from a market share drop of that magnitude. Next page, please. In terms of business jets, it's really interesting. The top half of this business is, well, uncertain. We don't really know. Right now, there are so many conflicting indicators for business jet demand. It could be that this dip we've got, and we're basically showing numbers from last year relative to numbers this year for both the large cabin and the small and medium cabins. Right now, our assumption is we make it good in a couple of years. It could even be faster than that. We could see a faster recovery, but right now we're being conservative. Next page, please. The defense budget, good news. Procurement today is 3 times as large than in the last jetliner downturn. So that defense is safe haven is hugely important moving forward. We do have a plateauing there in the coming years, but in the here and now, relative to that 2002 downturn, we're in so much of a better place. Next page, please. Another thing I would bring to your attention is that there's absolutely no clear relationship between US defense spending and the economy. You overlay recession years with defense spending in constant dollars, there's clearly no connection. In other words, yes, the US owes a lot of money. Yeah, there are concerns about the sustainability of spending at this level, but there's no past as prologue here. We could just easily keep going at a pretty high level of defense spending. Next page, please. The consequence of that robust environment for military fixed wing output is this. Heavily F-35 for now, with T-7 and B-21 joining at the top, and a lot of legacy programs surviving, including my old friend, the C-130, the longest lived military program in history, And I'm pretty sure that, as somebody once put it, 24th century archaeologists will find the production line going somewhere, somehow. Next page, please. Europe's another story. And the way to understand European industry right now is they're basically like America, except without the F-35 and without the B-21. So much of the discussion right now in European industry revolves around what they're going to do for the next generation, Tempest for SCAF, new helicopters, whatever else. But they need to start coming up with solutions if they're going to see metal cut in the 2030s, even the late 2030s. So a lot of discussion over there in Europe that really is going to come under the gun. Next page, please. Rotorcraft, you've got US military demand falling, the civil market more or less stable, international military stable. Next page, please. Here's our total sum, what we're going to expect in this year. There's good news and bad news. The good news is heck of a comeback. I don't know if you can see the bottom line there. It's a little bit cut off on my screen, but we're seeing a double-digit recovery. The bad news is an awful lot of that is due to that top segment, single-aisle jets, and it's a function of the MAXs returning to production and the delivery of a couple hundred MAXs that were already built but not delivered. So from a manufacturing activity standpoint, this kind of overstates what's going on in 2021. In reality, we're not going to get to decent recovery numbers until late 23, early 24 from a manufacturing standpoint. Best I can tell you, though, is we've stopped falling. We are going to see some black ink this year. That's good. Next page, please. I know this is the National Aeronautic Association, so I like showing this chart. And of course, it's US industry deliveries and as a function of the entire world. Predictably, due to problems with the MAX, we took a bit of a hit last year, and as well as the broader industry. But as the MAX comes back, and of course, as the F-35 resumes its ramp up, I'm not concerned about the US maintaining its 50% share of world aircraft output. However, if Boeing does nothing on that mid-market segment, then yeah, it's very much at risk. So much comes back to what Boeing does to fight off the A321neo. Next page, please. My final chart before I turn over back to Greg. Last year, well, here, I did the job for you, Greg. You asked about comparing side by side. That red line at the top was the civil top line number I presented last year while enjoying a, what was it, loose cannon? What was the beer you gave me? Something like
Loose cannon or something like superior wit or something like that. Like something
one
like
of those.
that. Yeah.
Anyway, red was what I told you. Whoops. Is what we got. The only thing I can say by way of consolation is that that period of falling into that pit has ended, basically, and that the feeling you get, both on an emotional level and from a hiring decision basis and on an investment decision basis, whether it's machine tools or equipment or whatever, your whole approach to life changes when you're climbing up at a double-digit growth rate. Yes, I know we're not back to where we were or would have been, and we won't be for another couple of years, but at least we're getting that feeling of double-digit growth, which really does change your mindset. So at least we can look forward to that. I'm sorry to have to deliver this unpleasant image of a pit to you. Thanks so much for listening to me. I'm here to answer questions as long as you like. Greg, back to you.
Thanks very much, Richard. I think so. Usually at this point, for those of you who have not been to one of our luncheons, people are clapping and Richard's taking a nice big gulp of his beer, catching his breath a little bit before being barraged with a number of questions. And we have a number of questions. I'm actually going to play off a comment that Angela Gittins made in the questions and form my own question, and then get to, I think we have time for all the great questions that we've gotten. But Angela pointed out, Richard, you talked about the Dow. Of course, the Dow is not the economy, right? It's not the whole economy. And I was I was not in the 4%. I was in the, I was much more pessimistic. I have to admit, I did answer that question. So you've got, the vaccine, yes. We've got the Dow is up, yes. The savings at 45-year levels, which I didn't fully realize, which is terrific. But isn't there still going to be some uncertainty at the end? Isn't it going to take more? We're probably looking at a year from now before there's enough vaccination for people to feel fairly comfortable, I think. It is going to take a little bit more time. There's a lot of uncertainty. People might be saving, but they're saving because they're either unemployed or scared about their job or whatever. So just sort of a devil's advocate question, and maybe further explain your optimism, which I hope happens, by the way.
Well, there's an awful lot about this recovery that is what economists call a K-shaped recovery. That is to say, there are two tracks, one going up and one going down. And as you might imagine, the structure of that recovery is helping to fuel the pre-existing condition of income inequality. Inequality is only getting worse. However, and I'm not thrilled with this reality by any means, but it is the people on the upward track who do most of the travel. And I'm far from thrilled about this structural inequality in society. But the people who really drive travel numbers, particularly for business travel and for premium cabin travel and whatever else, are on that upper track. It's just a really deeply unpleasant aspect of this recovery that it's greatly, people who have service economy jobs are fine. I'm fine. Most people in the audience, I hope, are fine. But then there are an awful lot of blue collar jobs that are really not fine. And that's unfortunate, deeply unfortunate. But that's not typically what drives travel. So just from a purely clinical perspective here, it's better just because of that dynamic. Now, in terms of business travel, that's an interesting one. We spend a lot of time segmenting things in terms of customer-facing business travel versus intra-company travel. And customer-facing travel comes back the fastest because you got to go see customers very fast. No one is really debating whether that's coming back. Now, intra-company travel, that might be something to debate, especially if there are the kind of budget cuts that you and Angela mentioned. But I tend to think there'll be a one-off effect where everyone goes to see the business units they haven't seen in a year. And after that, maybe things slow a bit, but the initial comeback is extremely strong. So in other words, we might see much slower growth rates after that late 2022 recovery. But I really don't doubt that by late 2022, that comeback really kicks in and brings us back to where we were. And even if it does take us till a year from now to get full vaccination, that still gives you, in my forecast, 9 or 10 months of breathing room for everybody to feel good again.
Your comments sort of get to a question TJ Schultz had about recovery of business travel and the remote office and all that kind of thing, changing everything. I guess you're seeing that it'll change things some, but not maybe to the level that some people think.
I think it's important to remember that these sorts of technologies, like the one we're using now, have always been available. For a very long time, they've been available. For a time, I was showing up Zoom share price overlaid against air travel demand. It was sort of an interesting study. But what's really interesting is if you were to go back and look at improving telecoms technology, relative to air travel demand growth, the only logical, and I know it's foolish, but the only rational numbers conclusion would be that better telecoms actually accelerates the need for jet travel. Because, for many years back in the early 90s, we would debate whether the long-term sustainable number was 4.9 or 5.0 or 5.1. The last decade, it's been 5.5, 5.6. 2017 was 7.6. 2018 was 6.5. We had all this technology then. If it goes back down to 5, I'm fine with that.
Okay. So Peter Lengill wants to know if you see Embraer continuing the road alone, future merger opportunities, or Chinese investment. Yeah,
thanks, Peter. Good to remotely hear your voice. I'm a big believer in Embraer's survivability. I thought there was an opportunity there with Boeing. It didn't work out, of course. The Chinese would appear to have a lot of overlap with Embraer. I mean, they'd have to abandon a lot of what they're doing. And they'd have to also, frankly, make the kind of investment in other people's planes that they really, so far the investments they've made have been 100 million here or something like that, not the multi-billion sort of investment there. I just don't see the China thing happening. Could they team up with another company? Frankly, the thing that intrigues me most is the idea of Embraer allying with a supplier company. Hey, Peter, maybe it's Safran, maybe Raytheon Technologies, maybe it's Honeywell, maybe I don't know, someone like that who says, we're sick of this duopoly. We want to create a third player. And it's sort of interesting. This is basically what United Technologies did with Bombardier when they created the C-Series. They basically said, you probably can't afford this, let us help make it happen because it's in our interest. So maybe there's an alliance between a supplier and Embraer, or even a US defense prime and Embraer. I think there's a number of things they could do. But the most important takeaway is that, yeah, they're fully survivable as is. It's going to take some painful readjustment, but survivable.
So Tom Bishop wants to know if you see Boeing fully recovering to their pre-MAX, pre-COVID levels, and how long do you think that'll take?
It take a long time, and it depends on the metric. I mean, right now their debt is 65 billion or something, which is about the same as I think somewhere between Switzerland and New Zealand. And they've got this structural problem in their product line. They really need a mid-market product. I think with the right leadership decisions, they have an opportunity. It'll take them a long road back, but I have no doubt that they could do it. They could get back there by the late part of the decade. They absolutely could. And I think given the likely shape of the recovery, they would be rewarded with really solid order numbers when this new product was arrived on the market. Will they do it? I don't know. And if they don't, then the answer to Tom's question is probably not. They don't quite get there. They need to, but we'll see.
So Gustav Baldian had a long question about vaccines, and some of it you've already discussed. I know we're sort of bouncing around. I'm testing your mental agility here, Richard, which I know is quite up to the task, going from one topic to another and then back again. I'm not going to ask the question about, whether, how many people are going to get vaccines or whatever, but do you think that there will be proof of vaccination going to be required for travel, at least in the short term, and especially for international travel? Will people have to show that they've been vaccinated before they can get on a plane?
It's certainly possible. And I know ICAO and IATA have, promoted the idea of digital passports as the way to go. And it certainly makes sense to me. My view, and maybe I'm just a bit too optimistic here, but we're still looking, to me at least, at a one-year problem. The Atlantic today has a really good piece by Sarah Zhang, which I'd recommend, about why herd immunity might not be essential in solving this problem. And the sort of, total vaccine penetration rates, might not need to be in the 80–90%. You might be able to get this problem under control with something less than that. It's certainly worth reading. I tend to think this isn't going to be an issue in a year and a half. There might be lasting ramifications in many different levels, just like the Spanish flu. People have written about that and how it impacted society. But if there's one analogy, frankly, that holds, is that the Roaring '20s were an outgrowth of that terrible period, that there was a heck of an economic comeback from it. And I tend to believe in that concept. Anyway, getting to the point, digital passports for a limited period of time, that makes some sense to me.
A couple of questions and comments about twin aisle planes. One person commented that, with fuel prices low and interest rates low, why not, twin aisle planes? I mean, I would argue it gets to the market you're serving with them, as I'm sure you'll discuss. Jeff Veld expands on that a little bit. With the growing number of unsold and unused double aisle, twin aisle planes around the world, what do you see as the outlook for future demand, and how does that impact development at Boeing and Airbus with all those unused, unsold planes laying around?
Well, the availability of twin aisle jets, that's absolutely a point, but they tend to have an unfortunate way of hitting a D check and getting retired early. Mm-hmm. It might not show up in raw numbers of available twin aisles. Rather, it will probably show up in just 777-200 ERs that get retired at 18 years, and then as they head to a D check, for 330s and what have you. Certainly, right now you're seeing that bloodletting with quad jets across the board. You use a single aisle rather than a twin aisle, not just because of economic, operating economic and capital cost reasons, but also because it enables new city pairs that give you more pricing power, greater resilience in the event of a downturn, and frankly, ESG benefits. You're taking off and landing half as many times, you're going to see a benefit. And there are so many new city pairs that are emerging as a consequence of the new, more capable single aisles. That stuff makes its own gravy. So in other words, it's going to take more than the persistence of cheap twin aisles to get people away from these new city pair options, especially since, you know, what is the most important thing to remember in the airline business? Robert Crandall, 20-something years ago, nobody ever went bankrupt flying a plane that was too small.
I think wasn't Bob also the one who wondered how much the piece of lettuce on the sandwich cost, and let's get that off of there.
Yeah,
and then,
that's right.
and so forth. He was. They don't make them like that anymore. I was a couple of times being in the room with Bob Crandall and Herb Kelleher at the same time, or some of the fondest memories I have. We need more people like that. So Michael Bruno wants to know. Clay corrects me. It was Delta 1992. I think on the lettuce leaf thing. So I stand corrected. Although Bob did tell me that one time that planes are so packed because passengers want them that way. And I said, what do you mean? Nobody wants no legroom. He said, you want low fares. I need to fit, 2 more aisles of people on a plane to give you the fare you want. So I want to thank Clay for the correction. And I think I know the story I've just told about Bob is true because he told it to me directly about the legroom. Anyway, Michael Bruno, Richard, how do you see the growing role of the largest lessors affecting the manufacturers, if at all?
It's an interesting question. I think it, and Mike could remotely hear your voice too. I think you have the distinction of the last person I had dinner with just before my last plane flight in LA a year ago or whatever it was. It's obviously a lot of it comes down to what can be financed in the broadest possible user group. So if there's a factor that magnifies, that amplifies that secular shift away from twin aisles and towards singles, it's that. Because lessors love stuff with very large and remarketable user groups, as many customers as possible. They like stuff that can be financed. So now that we've rounded something like 50% in lessors or heading towards it, we're almost there, I think. That's just another big factor that drives us towards single aisles, is simply being more financeable at more favorable terms. It's absolutely a factor.
Well, there's a related question here, I guess. You mentioned single aisle. Can a small Boeing twin aisle compete with the 321neo? I'm not sure how small it would have to be. Brian Jacobs asked that question.
And obviously Aviation Week broke that last week. And the prospect, I think it was Guy Norris, the prospect of a rebirthed NMA-5X version doing that job. I just don't see a way to do it. We've done charts. There is a structural gap in both manufacturing costs and operating costs between singles and twins. Now, Boeing's story with NMA was they were going to do a dimpled fuselage using advanced composites that reduced wetted area by 8%. Unfortunately, that had the effect of getting rid of belly cargo, which kind of is one of the reasons you use a twin aisle. And you also have the structural engine. I think the NMA engines were baselined at about 52,000 pounds of thrust. Even if you do shrink them a bit, you're still talking about bigger, heavier engines than the 30-somethings on the 321neo. That accounts for a lot of that big operating economic gap between singles and twins too. So I really think what Boeing needs is something in the class of a 757-300 with all new body and wing and composite and maybe a composite body and new motors around 40,000 pounds. That's where you need to be. Going after a single with a twin just seems futile to me.
But let's look at the future a little bit. Gustav is back with a question about hydrogen. The hydrogen or not the hydrogen powering the next gen airliner. Airbus and the EU are betting on it. We had Amanda Simpson from Airbus on one of the webinars we do with the Hall of Fame, National Aviation Hall of Fame, a couple of months ago talking about it. Very interesting stuff. Is it a game changer or is it pie in the sky? What do you think?
Maybe sometime. I mean, you look at the challenges. I sometimes wonder whether the engineers and the economists don't get along very well. You look at what can be done relative to the economic consequences of doing that. They would appear to be pretty substantial. I mean, obviously you're going from something that is, it's fuel. We know how to travel with fuel. Traveling with something that needs to be preserved at negative 235 degrees Celsius, that takes up a lot of space. Oh, and not only that, your wings are now dead weight because you can't store that cryogenic stuff in the wing. So it would seem that the consequences from an operating economic standpoint would be pretty negative, and whatever advantage you got from hydrogen would be obviated. So maybe one day they'll solve all these problems, maybe with fuel cells, I don't know. But this 2035 story, I mean, that's just kind of cloud cuckoo land. And, frankly, not to be sinister, but if I was trying to stop Boeing from making the right move here, I would put that idea out there to disrupt a Boeing product launch. But I don't think it's reality. And, frankly, I think from an Airbus standpoint, they've been offered, hundreds of millions of euros to work on this. Will Airbus actually spend their own money on it? I doubt it. I don't think they will, because I think they probably see something like what I see. I think it's just an opportunity to take advantage of a generous French government investment package for new technology that has the image of green to it.
I'm going to put in a shameless plug for the NAA Hall of Fame series. For those of you listening, go back to either of our websites and look and see what Amanda had to say about it. And I think she tried to address some of the questions, Richard, that you mentioned about the concerns about it. I guess time will tell. I don't know enough to know whether it's going to happen or not. Nowhere near smart enough. Tony Veloci wants you to talk about defense a little bit. To what extent is DoD making meaningful progress on the high cost of sustainment of aging assets?
Yeah, and great to hear your voice too, Tony. Really, boy, it's a heck of a new world we're living in. Yeah, they've tried all sorts of things, I mean, obviously competing aftermarket among service providers, greater keeping intellectual property in-house. So depots and whoever can, do the jobs themselves. I think at some point you just say, some systems are simply structurally more expensive than others from an operating cost standpoint. And the most you can do is try to design new systems like the B-21 with an eye on what made the B-2 so expensive and how can you avoid any mistakes. Or it could be that it's just not possible, that simply more complex systems like the B-21 or B-2 are structurally going to be more, in terms of care and feeding. Maybe there's just not that much you can do. And, I know there have been reports of the F-16 joining the F-15 for Air Force procurement cash as a way of pressuring F-35 costs downward. I'm not so sure that does the job. I think some systems simply cost more. But everything has been tried. Everything will still be tried. I just don't know how successful they'll be.
Well, staying on defense, Terry Hall wants to know your forecast for the number of F-35s per year and C-130s per year for the next 5 years.
Yeah, obviously C-130 got yet another MYP. That looks like it's, the problem there is that the MC-130, HC-130s are ramping down. Still a few big international opportunities. The answer, long story short, is about 18 a year. Looks like that's sustainable. Economics should be 2 a month, but I just don't, they'd have to add more. You've got some planes being added for the TACAMO mission by the military. That's good. Maybe there'll be, some more French and German buys piling onto the ones they've got. We don't know. So a minimum of 18, maybe some upside to 22, 24. I guess that's probably F-35, 121, 123 last year, I believe, supposed to be 141. We've got it going to 160. The big question mark is the 50-something F-35As that the Air Force has been bringing on board every year. If you really do see F-16s coming into the mix and you have 12 F-15s per year also in the budget, yeah, no way. You got to go back down to 40 or even 36 F-35As a year. It's hard to predict that. We don't have F-16s in our forecast for the Air Force. We do have, for another 5 years or so, F-15s. And as a consequence, we've got 48 F-35As, giving us a total output of about 160 per year with international and, of course, Marine and Navy.
A question here, and we have several lined up, and hopefully we can get through the rest of them in the 12 minutes that we have. This one, I was wondering if it would come up. I'm going to read it the way it's written, but I saw the story about United's order not long ago, I guess earlier today, and was very intrigued by it. Today, Archer eVTOL announced that they'd be going public on the New York Stock Exchange via an SPAC at a post-money valuation of 3.8 billion, without having built even a tech demonstrator yet. Simultaneously, the billion-dollar order from United for their eVTOLs was announced. What's your outlook on eVTOLs, and what about eSTOLs?
The press release that accompanied that United quote order was sort of a bit of a masterpiece, and it referred to Archer as an airline, which is kind of funny in and of itself. And then, of course, it implied that, yes, if it's executed, it's $1 billion or something like that. To be cynical, I think United said, here's $10,000 for something. Please give us a lot of attention. It sure beats taking out a full-page ad in the Wall Street Journal, which costs a lot more than that. I'm pretty cynical about these things. There's got to be a market for eVTOLs, you know. I mean, but then again, if you look at the market for small vertical transport vehicles, as it's been, it's about 400 million a year, you know, for your Bell 505s or whatever else, your Robinsons, a few Airbuses. You could quintuple that market because of the technology stimulus associated with electrification or whatever, and you're still looking at a $2 billion market, which would not move the needle in any of my charts. I mean, it's hard to get excited. And then United, even if they were sincere about putting in more than $10,000, if indeed any money changed hands, what are they doing with this? They've had no interest or experience with short range, small volume travel ever. I think for a while they were doing a helicopter experiment out of Newark to New York, and I think that went away. So all of this, I'm just not a believer, but it's all the proof you need that there's way too much cash out there chasing too few good ideas.
Alan Dunbar from the United Kingdom wants to know if you foresee emerging volatility in the engines market through twin aisle panes driving strategic shifts.
Absolutely. You know, I mean, probably the biggest single area of concern right now is Rolls-Royce, which is heavily exposed to the twin aisle market. And of course, Rolls is in truly difficult straits in terms of finances. Of all the companies we cover, this is unquestionably the biggest area of concern. Now, we've had rumors of a Pratt-Rolls tie-up for many, many decades now, as long as I've been in the business. Is this the moment that precipitates something? I don't know. A good friend of mine who's a former historian of the Royal Aeronautical Society wrote a terrific piece about how 1971 nationalization played out at Rolls-Royce. It's in Aviation Historian this week or month. We don't know how this plays out. Do they get through? If they don't get through, is there some kind of mechanism? Because so far, the British government has not been doing very much relative to the US government, certainly not relative to the French government. Did they step up to the plate and help out? We don't know. If they don't help out, what does restructuring look like? We don't know. But if anything was to precipitate this, as Alan Dunbar describes, it's this moment in time. That's absolutely right.
So, we'll get through as many of these questions as we can. As always, Richard, you generate a lot of them. Thomas Scott wants to know if you think Boeing could do an airplane bond program to both measure interest and tie investors and buyers into a new airplane program. That's the question.
I'm sorry?
An airplane bond program.
Oh, a bond program. Interesting as a finance. You know, I'm going to leave that to the financial mechanics out there. It's an intriguing concept. I mean, it's a really, you know, I mean, there are so many different ways that haven't been thought of to approach R&D finance, because R&D has typically been out of the balance sheet, and maybe there are ways via bond to make something new happen. I think it's a wonderful idea. I just don't know how it would play out, but maybe it's I would hope that the people at Boeing realize that something has to be done and that there are financial mechanisms possible to make something new happen. And maybe this is one of them.
Well, I'm going to combine two questions from Terry Hall and from Leo Knappen about the future. We'll get back to some future stuff here. And I know the first one from Terry, what's your forecast for the development of a space plane that could take off from a runway and achieve orbital flight? And I remember that being talked about 30 plus years ago in an earlier life that I had in my career. And Leo's question is, what is your view of the supersonic segment in terms of market demand? Obviously, you have Boom and a number of other companies working on that.
Yeah, the first, boy, I remember NASP back in the day, National Aerospace Plane, and of course the Orient began, of course the British HOTAL program, and if it's come to anything, sadly, who knows? Maybe it will, but oh boy, that's a real cash hog, isn't it? And it's wrapped into the issue of hypersonics and whatever else, and maybe there'll be some outgrowth there. I'll just say it's maybe it's just going to remain an intriguing prospect as it has for half a century.
Yeah.
SSBJ's per Leo's question, it has always seemed like a good idea as long as I've been looking at it. But the trades are really substantial. I mean, the Aerion product is the furthest along. If it does happen, it's going to be Aerion. I tend to believe that very strongly. But you're asking somebody to spend 50% more than the current very high level that they could spend on, Leo, a Global 7500. They want to spend 50% more than that. So going from 75 million to a 120 something million, you get a lot less range, you get a lot less tube, and you get to fly at Mach 1.4 or 1.5. That would appear to not be I'd rather have the giant boardroom in the sky and take a little longer to get there. And but are there people who will sign in the dotted line and just say, yeah, absolutely. Yes, there are. We know that. We just don't know how many. It would appear to be, the numbers we've come up with working with other folks many times over the years has been that there's probably something out there for, 300-400, something like that, including government demand. There's probably something like that out there. Can someone make a business case, make it stick, keep it going and attack that market and be certain of the results? That remains to be seen. But there are big, it's not free. You don't get to fly Mach 1.4 without big trades in terms of range, tube, and economics.
There are a few questions left, but I'm going to just say that this is the last one. So apologies to some people who didn't get their questions asked. But we heard the word tariffs a lot, right? And a lot of, we have to do things differently in international trade and so forth. Can you talk a little bit about that and the likely impact of, you always get a question about this, I think, about Boeing and Airbus and the resolution of the dispute, which, and so forth. Can you talk a little bit about all that?
Well, so far the tariffs haven't really damaged anybody. It's caused maybe a lot more ill will, but there was always ill will. It could easily get worse this year because, of course, Europe has been allowed to impose tariffs, and because the U.S. has ended the exemption for the Mobile facility. So both sides are going to have to pay more. Please end this. I mean, one of the Biden administration's—
I assume you're talking about not the webinar, but the Boeing Airbus dispute.
I could talk all day, especially. I'm not even done with my beer. No, I mean, it's so important to end this because, the Biden administration has made it a priority, even before they were elected, to repair relations with allies. This would seem to be a core part of that. And there is just no way, given the arsenal of weapons that both sides have been allowed, to allow for a winner. No one has an edge here. So, for God's sake, at least establish a common playing ground. I know the Russians and Chinese play with their own rules. At least have some kind of harmonized terms and conditions. Sit down and negotiate and get rid of it. I think it's essential. Will it happen? I don't know. It's been like, what, 18 years now?
Yeah. So I'm going to give, I'm going to amend what I said before about the last question, since Peter Lengiel has resubmitted a question that he had that I didn't get to, and that's the privilege of a sponsor, right? You get to ask a second question. What about the financial, and this will be the last one, unfortunately, what about the financial viability of the airlines lessors to sustain the market recovery, and in parentheses, loan repayments to come?
Yeah, I don't think that's been fully appreciated, that when you get a lease payment holiday, it's not free. It's not like a PPP package that you don't have to pay back, right? It's the real deal. And that's going to put in terms of airline finance recovery, as Peter implies, that's going to put a brake on things. I think it's becoming very obvious that there are winners and, not so winners in the airline business. And we've seen some casualties. We'll probably see a few more casualties. For everyone, I think, who has survived, i.e., most of the blue chip flag carriers and of course the blue chip low cost folks, it's going to, that additional debt, that additional obligation to make good those deferred lease payments, that's going to slow things down. On the other hand, I think it's important to remember that airlines, this is the ultimate contradiction, the ultimate paradox. But if it weren't for traffic, airlines would be living in paradise, right? I know that sounds bizarre, but you think about it, everything that an airline had been concerned with before this pandemic, you were concerned about high fuel prices, maybe some kind of labor inflation. You were concerned about the price you were paying for jets and whatever else. Okay, there's no upward inflation on wages anymore. Jet fuel is going to stay cheap, or at least at the low end of the range for some time. Interest rate payments, no. Debt servicing, no. It's cheap as heck. You're getting government support, at least for now. You're probably going to get another tranche, I hope. Jets are, well, they're cheap. Matter of fact, 2020 saw a significant downshift in jetliner pricing. So you're living in paradise. All you need is people to come back. When people do come back, and again, if you accept my so-called logic, it'll start to look good in late 2021 and it'll start to look great in 2022. You'll probably have a bit of a honeymoon period where your structural economics are still pretty good and you can make good some of those deferred payments. As from the standpoint of the lessors, they're still being given cash by people. And again, gets back to those EV tolls. People are looking for a home for all that liquidity sloshing around out there. Mm-hmm. And well, we can all thank them for it.
Yeah. Well, Richard, this is great as always. Thank you so much for doing this. I see that poster behind you. That's very much a place I want to go right there. I'm really hoping you're right about 2022, or really hoping you're right. I plan on going wherever I'm allowed to go, anywhere in the world, as soon as I get a shot in my arm. I want to again thank our sponsors, Safran USA and Flight Safety International, as well as the companies that supported our 2020 season table program: Aerojet Rocketdyne, GE Aviation, Gulfstream, Lockheed Martin, the National Air Traffic Controllers Association, Northrop Grumman, Rolls-Royce North America, and Raytheon Technologies. The slides will be available to everybody. You will get that, and you will get a link to be able to watch this over and over and over again. And Richard still will not be finished with his beer all the times you watch it. But feel free to have a beer or whatever you'd like of your own while you watch. Thanks to all of you for tuning in, and we'll let you know when we have another webinar. Thanks very much. Thanks, Richard.
Thank you.